Good morning, everyone. Here we are. It's Wednesday. It's that time of the week. Marlene Gonzalez with Canvas Real Estate in Miami Lakes. And today I have the special honor of having Mr. Austin Palacios from First Origin Mortgage Lenders on the meeting here with us, okay? And this is the first time that we're going to be doing our version of Ask Our Lender, which
Thank
is
you.
First Origin,
Yep.
okay? And we're gonna do this the last Wednesday of every month. And that way, everybody will be tuned in as to what's happening in the mortgage world. And I think there's a lot happening this week, right, Austin?
There's been a lot of things happening recently, with like rate cuts and this hurricane coming through. We're going to answer some major questions here in a bit.
Definitely, definitely. Okay. Before we get started, do you want to tell us a little bit about First Origin Mortgage Lender, who runs it?
Yeah.
Who's really behind the scenes
Yeah.
and in the house? Okay.
All right. So a little bit about us, guys. We've been in business for about 20 years right here in the heart of Miami Lakes, about like a 2-minute drive from you guys, So it's a great area just to be around you guys too, right? Um, we've been doing this a long, long time. We've been through, the tough, right? Like, 2008 was a big one for a lot of mortgage companies, and we got through that. And it's because of our core values and the way we do business, right? We're not out here, scam people like some banks are and some lenders are. We're out here doing safe loans, making sure your clients make their payments on time. Our default rate is 0. So we make sure time and time again, that we do our job as efficiently as possible and as great as possible, because we want to keep you guys as clients, and we want to get you guys returning over and over. We want your nieto, your cousin, your deal, like, we want everybody, and that only happens with fantastic service, right?
Definitely, definitely. What do you think sets First Origin Mortgage Lenders apart from other lenders? What is so unique about you compared to other lenders?
I actually love this question. All right. So we do the little things right. All right. So, for example, we earn clients from the bigger guys all the time: Chase, Wells Fargo, Bank of America, you name it, we earn it from them. Okay. Like, for example, you go to Wells Fargo for a pre approval. We had a scenario like a month back. It was I think it was a teacher and a mechanic, right? And he was making 70 and she was making 50. They got approved for 650,000. We're like, okay, maybe we could stretch it a little bit. And then turns out we do the soft pull, which is a good thing about us. Banks will just go straight for the hard pull, straight for the kill. But we go to the soft pull, and our guy has a 300 credit score.
300?
300, like super.
I didn't even know that there was a credit score that low.
I don't either. He had a ton of derogatory accounts and stuff, but nonetheless, right? So we were like, okay, we put him through the options. We're like, okay, we could do Wayfinder, but you're only gonna get like 80 points out of it. Wayfinder is a little application that we use, that we pay out of our pocket, to tell you what you can do to get your credit score higher, right?
Okay.
Usually like 60 to 80 points, a bureau type of thing. And then if it's severe, like this guy, 300, we send him to our in-house credit person, who in about 3 months gets people to like 700 plus, and he's amazing. He does his job very, very well.
Yes, we have recommended him to a number of
Yeah.
potential buyers, and it is true that he makes a difference in the first 90 days.
I've never heard a bad review from him, and we've been using him for years. So he's really, really fantastic. But nonetheless, so the Wells Fargo guys, the Wells Fargo banker, the realtor, and the clients got on a FaceTime together, or a Zoom call, and they got together and they were like, "Oh yeah, we can do this, no worries." 3 weeks into the contract, guys, denied. Like, it's the little things like that. And then another one too, right, that we help you guys out with. You guys submit documents to us all the time, right? A bunch of stuff. We sort through them. We're not robots. We're not going to just hand it to the underwriter just so they can be like, hey, like, now we need this. We're going to sort through them, make sure it's as clean as possible. That way, when it hits the underwriter's desk, it's going to get cleared. For example, like, that happens all the time. The thing with when you do amendment to contracts, right? So I had a scenario on an FHA loan. obviously, you know, FHA loans are a little bit more strict, right? The seller had to fix the roof. The realtor made an amendment to fix the roof,
Mhm.
and he had numbered it. This is way back then. And it became a problem because when you number them, the underwriter sees it and then he asks for every single amendment. Now, if the amendment if is not numbered, like little things like that, we suggest don't number the amendment because then we can submit, you know, certain amendments that really matter. You know, the underwriter doesn't have to know that the seller is going to go fix the roof because then he's going to ask you for inspection and he might ask you for another appraisal, and that's costing your buyer another $700.
Right. So in other words, because I've seen you in action, you basically prepare the file, all the documentation to give it to your in-house
Mhm.
underwriter.
Yeah.
So it's not just that you take an application and then you hand it off to a company or another department of
Mhm.
sorts that has nothing to do with your company. You guys do your own in-house underwriting, you order and you have your own appraisers, so on and so forth. You're a direct lender. You're not just a mortgage broker.
Yeah, absolutely. 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 We have all the branches. We did one. Listen, this like I'm telling you right now, they're the best in the business. You so look for an example, right? We'll talk to him about the property, you know,
Uh-huh.
and then we'll be like, here's the game plan. You know, let's put boxes in front. Let's take the stove out for a little bit for the day. Like if it's a kitchenette, let's organize the room a little differently because he has to take pictures and underwriter's going to see the pictures, right?
Right.
So of course there are appraisers, guys. They want to get our business over and over again. So they're going to provide that type of service. They want to help you close
Yeah, they
because they
wanna
want to help us close.
they wanna close the deal. They don't wanna kill the deal.
Exactly. They don't want to be
Okay.
that guy.
Well,
So
great. Well, the next question we have, and by the way, if anybody has a question that you want to ask Austin, feel free to chime in, raise your hand in the chat, and we'll have you. But since this is the first time we're doing this, we prepared some pretty good questions, I think, right,
yeah,
Austin?
no, I think they're fantastic questions. So
Okay, now the next question on the table is, what are rates currently at right now after the Fed cut half a point?
all right. So if you go to the bank right now, right, they're likely to give you around like a 6.3, 6.2, even though the 30-year fix is a 6.1. It really just depends on a credit score because usually a 30-year fix is for amazing credit scores, you know, then you'll get that 6.1. But with us, since we're a low margin lender, meaning we undercut banks to get your business, we're sitting around like 5.75 to 6.
Can you say that again? You're a low margin
Low
lender.
margin lender. Yeah, I love to say those words over and over and over because that's one of the reasons why we gain so much business, right? And so much traction with people because we save them money and that's the bottom line in this
Right.
business.
You know, sometimes we look at closing statements after the fact from other lenders, and we're like shocked with what some people are having to pay at the closing table for the loan. I mean, it's enough that you have the down payment, you have the closing fees from the title company. Imagine also on top of that, that the lender takes a big cut. It really
No,
puts a bind on
a
them.
lot of these guys too out there, you know, some of these bigger companies will charge you a couple points just to have a higher rate too. So it's kind of ridiculous how these guys operate, but luckily we have good core values and then we do very well with that. So
Very well, very well. Okay, the next question that we have here, what are the predictions for another rate cut before 2024? There's been rumors about
There
that. Can you
is,
give
there
us some
is.
insight?
All right, so right now, the rate cut, they're saying that they might have one towards the end of the year, and hopefully they do. And as soon as they start even talking about it, you'll see that the rates start getting priced in, right? Because that's what happens. So actually, currently, I wanted to say this in the previous question too. The rates were the lowest the day before they announced the rate cut.
Really?
Fun fact. Yes. Because what happens is when they announce the rate cut, they do it's like a knee jerk rate at that point. So like it spikes. So if you look at the 30-year fix for for the loans and stuff like that, you'll see that it hit a little tiny little spike. Not much, like an eighth, you know. But still, like it's something that's so interesting to see that when they announce it, it actually gets a little worse. So definitely right before they announce best times to buy, sell, because realtors, when you guys are trying to get sellers, your listings, it's the best time because there's going to be more competition because now these guys' budgets are increasing with the lower rates. You know,
Mhm.
people are getting 50K more on their approval, 60K, you know, so it's a great time to get those listings.
Well, that brings another question to
Mhm.
light. Okay, interest rates have improved.
Mhm.
The other day, our broker had said in one of our meetings that we have about 4.5 months worth of inventory at this time. That we are slowly, not slowly, but we're about to go into what is called a buyer's market.
Right.
If that is the case, that we get up to, let's say, 6 months worth of inventory, and the tables turn, do you think that then interest rates will spike up or
No.
it'll stay the same? So we'll get the advantage of more competition where sellers have to maybe negotiate a little bit more
Mhm.
with the buyers to get their business, have them purchase their home. And on top of that, the benefit of lower rates.
Yeah, I really don't think the interest rates are gonna like skyrocket or anything like that. They should stay around here for a significant amount of time. Even possibly because we predicted in one of our last sales meetings, probably like 4 sales meetings ago, that in like 2026 we possibly touch like the threes, you know. So I mean, right now we're already in the fours. I mean, FHA, if you refinance with us right now, we could probably get you at like 4.75 at par, you know, like, and you don't have to have a crazy good credit score either. And even cash out refinances for an FHA is like at 5.1 or something like that. So
Okay, well, that brings me to the next question. Okay, is it a good time to consider refinancing, and what are the determining factors that someone would want to refinance their property?
yeah, absolutely. So I mean, there's a few different factors, right? Maybe somebody obviously wants to get a lower payment, right? Because in the last 2 years, maybe they bought at 7%, you know, and that's common. You know, interest rates, even for like FHA was like at 6.7, 7.1, you know, and that's rough, you know, and now they're in the four. So now it's a great time. At any time where you can drop like 3 quarters or more, like it's worth it because at that point you're guaranteeing yourself at least $100 or more in savings.
Or even people that bought and were not on a fixed rate for 30
Oh yeah,
years,
that too.
right?
That too.
So typically, when they buy like that, when should they be looking at a refinancing? In 5 years, 7 years? What dictates that?
So on the buy downs, you know, they have 2-1 buy downs and stuff like that, which is really gimmicky. We don't like to do those because it's almost like a facade. You know, you think you're gonna get that really good rate for the life of the loan, and because the LO didn't explain it correctly, you end up getting, you know, the 6.75 or even the at 2 years down the line, you get the 7.75. Usually people catch it when the rate spikes up anyway. And then they come to us and be like, hey, like why did this happen? You know, and like, look, he gave you a buy down. You know, you could see it here, here's the charge and stuff
Right.
like that. And
Now, one thing is to just refinance
Mhm.
across the board, and another thing is to refinance and cash out.
Yeah.
Can you explain the differences and maybe the interest rate one compared to the other?
Yeah, absolutely. So rate and term refinances are gonna have the best rate all the time because they don't get a rate hit. You get a rate hit, it's not a significant rate hit, but everybody at every bank there's a rate hit for a cash out because it's deemed as more risk because you're increasing your loan amount by a certain amount, right? So for example, if your loan amount is 50K right now and then you want to cash out 200K of equity, then your loan is 250, right? So it's granted your interest rate is going to get that rate hit, and then depending on the program and stuff, it affects your rate as well, right?
Okay,
And we can do it with any program. It could be bank statements, FHA, conventional. It can be DSCR. You know, whatever your heart desires, we'll find it for you. Okay, so
okay, cool. Now, we have a hurricane in the horizon this week,
yes.
huh?
Mm-hmm.
Since there's a hurricane, how does that impact closings, for example?
Yeah. So if they're in a disaster zone, because you know now there's a cone of uncertainty right now. So now there's a suspension on everything.
Mhm.
So when currently there's pieces of Florida that are in the cone of uncertainty, so they'll suspend the whole Florida for the couple of days, and usually it doesn't last more than like 2 3 days, I will say. So, but the worst part is when you're in the disaster zone, like because supposedly Key West, right? So Monroe County might get a little hit with that. What's another one? Supposedly Fort Myers might slightly get hit.
Or flooding or
y-
something like that.
Exactly. So when it's deemed a steps for a current homeowner who wants to sell and buy. Perfect. I'll hit that one
Okay,
next.
well, thank you, Aaron. That's a great question. We'll definitely answer that in a minute for you.
Okay, so at that point though, when it's in the disaster zone, they will have to get an appraiser to go out there again, most likely, to reevaluate the property and make sure there's nothing wrong with it. The roof is the biggest thing, really. The roof, the structure, all that good stuff. But yeah, it would only really delay you like a couple days, I would say, because if you're in the disaster zone, right? If you're still dealing with the suspended, like the suspended policies, if you have your policy written, you should be fine. But if it's not, then you might have to deal with waiting a couple of days.
Right. So in other words, why does Citizens stop writing policies for the entire state, even though it seems as though it's gonna hit maybe the panhandle?
Yeah.
Why are we in Southeast Florida impacted?
Yeah, so I mean, that's the thing, the storm could hit it like a little rock and make a turn, right? As we all know, weathermen aren't always, correct. So Citizens knows that too, and they're just trying to cover themselves up and make sure, they're not going to be liable for something like that. So they make sure they have like a suit, like, yeah, I'm sure you've seen it. The cone of uncertainty, right? It's pretty big. There's
And we're a peninsula, so it just covers the whole state. If you
exactly.
think of it.
So they, as soon as they see that, they're like, oh, red flag, and then they suspend it immediately. So they're just trying to cover themselves up. So
Definitely.
and I get it. If I owned the business too, I'd probably do the same thing. So
Yeah, so okay, so supposedly it's gonna hit Thursday, the latest.
Yeah.
So realistically, will they go ahead and start writing policies again by Friday, or we don't have a guarantee of that?
there's never a guarantee, I will say, but if it only hits the panhandle, they might clear, and they deem like pieces of the panhandle like disaster areas.
Mm-hmm.
But like in South Florida, we shouldn't be affected. But obviously, there's no guarantee of what Citizens going to decide. So
It's interesting. We have a closing occurring in the office that is going to be by no later than September 30th, which is Monday.
Yeah.
So I always get confused. If they close by September 30th, do they have to pay prepaid interest for the whole month of September, or that's if they closed October 1st?
it would have to depend on the type of program they're doing as well.
Got it.
But at times, yes, it would be for the whole month. So
For the whole
So
month.
if they're closing on September 30th, they only have to pay for 1 day of interest for the 30th, and then
Got
their
it.
first payment will be November 1st.
But if they close October 1st or October 2nd, they pay the whole month?
Then there's an option. We can do a negative interest and credit them for 2 days, and then their payment will be November 1st, or they can pay the entire month of interest and their payment will be December 1st.
there you go.
Okay, great. Before we jump into the next question, Aaron had a question, and Ray, nice to see you back with us. Maybe you could chime in now. What are the steps for current homeowner who wants to sell and buy?
Okay. I mean, it depends on the scenario, whether it's going to be, a simultaneous closing or not. We have to know, if they need the funds from the sale to buy, right? So we're going to qualify them based off of those parameters as well. But definitely that would be the first step, figuring out if they need the assets or if they can qualify with that mortgage already and all that good stuff. The second step would just be entering the process after you figure that first stage, because that's really the biggest part, knowing if they need the funds or not, right? And then you go into
that's going to be the key. What he just said is knowing, do they need the money for the down payment on the next one or not?
Yeah.
Got it. Is it recommended to do what they call a simultaneous closing? In other words, they close on the sale and the purchase at the same time, or maybe 1 day apart or something like that?
We do those all the time, although they tend to get hectic because anything can happen. if you as the seller, or let's say your buyer, the one that's buying your property, is delayed a little bit, then your purchase is also gonna need to get extended or delayed. So it's all dependent on that lender that's doing the financing for the buyer that you sold your house to, primarily.
Okay, okay. Aaron, did we answer your question? Was there anything else? And of
Yeah.
course, when you're going to sell your home and put a contract on a new property, there is an addendum that is subject to the sale of their property. But you got to be very careful with the dates. Never let those dates expire, because the addendum for subject to sale, if you put an actual date, okay, and it's not going to occur, you need to extend that addendum. Not only extend the closing of your purchase, but extend it also on the actual addendum. So keep that in mind, because we've had that happen, and then that provision goes away, let's just say, and you don't want to be out of contract. Okay, are you ready for the next question?
I'm ready for the next one.
Okay. What's the latest and greatest with down payment assistance programs? And tied into this, will Hometown Heroes come back with more funding?
Yeah, absolutely. So we do have several down payment assistance options. The best ones right now, I will say, are going to be FHA 100, the 5K grant, and the conventional 100, right? So my favorites to do are going to be FHA 100, because, you know, nowadays 100% financing is literally just getting the down payment and putting it as a second mortgage, which every single 100% financing option out there is going to have that guaranteed. Now, the great thing about FHA 100 and that 5K grant is that you can get a gift with those products. As long as you get DU approved with the gift inside the loan, you can truly get 100% financing. Because if you get the down payment covered by the second mortgage, and then you get a gift, and you get some seller concession and a lender, you know, there's so many things you could do. You can structure it in so many ways to actually get that 100% financing. And in fact, we've had closings in the past where at the closing table, the guy gets back $1,000 or more, you know, like just because they got the gift. And that's in gift scenarios too. If not, they really can't get money back. But when they get a gift, they can actually receive money back at the closing table. They get reimbursed. So
Interesting. And that brings me into my next question. So hypothetically, and I've been working with this buyer, they have saved $40,000.
Yeah.
It will be their first home, young married couple. And the fact that they've been able to save $40,000, can they still apply for some other down payment assistance?
Yeah, absolutely. The 5K one is based off where you live currently. You can live at Abuela's house, apartment, doesn't matter where. Most of South Florida gets approved for that. And then you can get the free 5K. That's a grant too. It's like, you know, it's not a second lien, and you get that free, right? And
Is that through the county or the state of Florida?
That's actually through us.
Oh,
Yeah,
okay.
so we give you guys the 5K based on that. Now the FHA one is through HUD, you know, so they'll cover the second mortgage, and we'll be able to do that way. And then there's no income limits for those two, right? There's no AMI that needs to be hit. For conventional 100, yes, because it's more for low income borrowers, but for FHA 100 and the 5K grant, you do not.
But of course, the fact that you're financing 100%, maybe the interest rate is just a little bit higher.
It's definitely not going to be, you know, the current interest rate is going right now is like between 5.25 to 5.75, I would say, depending on your scores for a purchase. So it's definitely not going to be around there. It'll probably be in the 6s or possibly even touch the 7s if the credit score is super low. So it is more risk, because obviously 100% financing means you don't really have any chips in the pot, you know, so.
Definitely. Okay, why don't we talk about investors?
Yeah, absolutely. So investors, we have tons and tons of programs, right? So
But how do we know which is the right program for the investor?
Oh, that's absolutely easy, right? You just have a simple conversation. You know, you got to see their needs, right? You got to see their wants and needs. That's primary, because at the end of the day, you're servicing your client, right? It's not just about, you know, a paper pusher, right? You're not just trying to put papers in their face and say, look here, figure it out. You know what I mean? It's, hey, you know, what do you want out of this? What are you trying to get? How much are you comfortable with? Let's try to structure it in a way that's going to be best for you and your family and whoever you're trying to do this for.
But what's the easiest one? Bank statement loan or
Easiest?
DSCR loans? And maybe you explain to the group what DSCR is.
Yeah, so I would say DSCR is probably the easiest one because that one you don't need income or anything like that. It would just be credit score, down payment, and the debt service coverage ratio, which we actually do no ratio, which means we go as low as like 0.7 to 1, you know, like that means like the property is actually costing you 0.7 versus your rent, you know. So we have tons of programs, but that's definitely the easiest one to do. Like if you just want the property and you know in your head, even though the appraisal came in probably a little lower on the rent roll, if you know that you can redo the property and rent it for more, then that's a steal, like anytime. So that's definitely the easiest one. But people do bank statement investments all the time, P&L investments. People do the fix and flip loans. We do construction investment loans as well. So, I mean, there's tons and tons of programs out there for anybody.
Right. So the DSCR is the easiest way or the
Yeah,
best
definitely the
way,
easiest
but they have to be able to prove their income.
No,
No?
no,
Okay.
there's no income verification on a DSCR. It would just be, we would do an appraisal to see the
Mhm.
rent schedule, the rent roll,
Okay.
and we'd go from there.
But when do you use a P&L?
So a P&L is just something that helps you qualify, just like a bank statement loan.
Right.
You
Okay.
know, if the bank statements, like for example, if this guy's bank statements don't really look good, or he has like a few different ways of structuring his company,
Uh-huh.
then a bank statement loan is probably not the way to go because he has, you know, way too many accounts and it's not going to look good in front of the underwriter because it's going to be like, hey, like why does he have one account like this and another account differently and stuff like that. So we like to gauge that stuff. And the P&L is practically very easy because it's not technically based on your taxes. Your accountant can do it off your real numbers, you know, because it's not connected to anything. So
Okay. Versus also, let's say somebody has equity in a property, excuse me, and they wanna refinance to cash out,
yeah,
but that's gonna add to their debt to income ratio, and the cash out purpose is to invest in a property.
in a property.
Okay, I think you're working a scenario.
I am, yeah.
And that's why I brought that up because I was even learning in the process of which direction are you going to take this client? Because I know you've tried several things, but it seems as though the refi is going to probably end up working
Yeah,
for them.
the refi is gonna work for them. I will say we always try to go for the way that's gonna get them the most income on paper because it helps their DTIs the most, and the way that's gonna get them the best rate, right? Obviously, those two things are gonna help your DTIs either way, but we combine both those things and try to find the product that's gonna help them the most, right?
Mhm.
So in that person's case, we tried a few different avenues and ways to do it.
Mhm.
But in the end, it ended up being it has to be a bank statement cash out refi to buy their next primary property. So
Okay, very well. Yeah.
And even in that case, because I know he briefly touched up on that one earlier in his sayings. That gentleman has two companies that are similarly named. One is you know whatever name LLC, and then the other one's the same exact name with an Inc. in the back of it.
Mm.
And he does a lot of deposits into both of those accounts from each of the companies. So there's a lot of money going back and forth that we had to kind of weed out. So that one was a little doozy. But we're gonna be able to do it in the end.
Now, in a case like that, was he transferring money from one account to the other, or they were actual deposits?
no, at times, yeah.
Well, yeah, it's a lot of transfers, which I mean they act like deposits, but we have to verify, you know, where the deposits are coming from, and in his case, it clearly states that it was a mobile deposit from, you know,
Yeah.
or a Zelle from that other company, stuff like that. So it clearly stated that it was from his own company. So we have to take out all of those deposits, and we can't count them because you're basically creating your own deposits to make it look as though you know one business or the other is making more money than it really is.
Right.
Got it, got it, got it. Well, the way I look at it is you're not doing cookie cutter loans here,
No.
okay? Each client is unique. You're going to evaluate what each client is looking for and then giving the best recommendations in order to make the deal happen.
Right.
And that is a big difference because if you go to a bank, a traditional bank, they're just an order writer. They fill out an application and it goes to underwriting, and if it doesn't, paper pusher, if it doesn't fit in that little square peg, forget it,
Mhm.
okay? Whereas First Origin Mortgage Lenders takes it up a notch and really evaluates all the different types of scenarios before they make a commitment if it's gonna be viable or not. Okay,
Mhm.
great. Now, my next question
Hometown
here, Hometown Heroes, when is that gonna be coming back?
All right, so supposedly it's gonna come back at the beginning of next year. I know Ray had said it in one of our last meetings. You said it was gonna be in March, something like that, or
There's no set date, but it could be as early as February. But
Okay.
chances is it's anywhere from February through May. Will be the next huge injection of funds.
Right. Do you see a slowdown just because it's an election year, Ray?
Slow down in the market or slow down because of that or in that program, you mean?
Financing overall, do you think people are holding back because it's an election year to make their investments? The enticement of the rates being lowered wasn't sufficient, or business is booming as always for you?
Well, businesses has been definitely pretty steady. We are seeing the return of refinances steady but surely. And that's always a good thing. A lot of people are cashing out though. So most of them, I would say 80% of the refinances right now are cash out refis.
Hmm.
So they are cashing out some funds. They're looking at possibly, their 401ks are looking a lot better because the stock market are at all-time highs. So
Mhm.
that's also a good thing. They are using that for for their next property. So I do get a lot of people that are cashing out to possibly start investing at this point also, since the rates are coming down. Because we're definitely not seeing rentals going down substantially, like the actual rental values. They are staying relatively high. But we are starting to see a little bit more business, and then the return of more inventory, as you said before, it's at a 4.5 month of inventory in Florida. It's actually higher as you go north,
Mhm.
and especially in Fort Myers. I believe they're touching at around 6 months of inventory in the west coast of Florida.
Well, definitely Cape Coral.
Yes, that is actually creating a little bit more competition. And we are seeing a lot more seller contribution now, or appraisals coming in 10,000 or 15,000 above purchase price, which one idea to give your realtors is, if they do have a scenario where they have a purchase price of 550,000 and the appraisal comes in at 560, then maybe you can talk to the seller's agent about raising the purchase price to 560 and doing 10,000 seller contribution. That can you can also look for properties that might have a little bit more equity for to help out your first time home buyers and stuff like that, in lieu of any Hometown Heroes programs.
Most definitely. And I always look of how many days the property's been in the market, because the longer the property's been in the market, the more the seller would probably be willing to assist one way or the other. Okay. Well, I know you do this automatically, but I want to make sure our viewers are aware of this. What assistance do you usually provide our agents when promoting a property or doing an actual open house?
Yeah, absolutely. So, I mean, we do tons of stuff. We'll post your listing on our stories. We'll do flyers for you if you need us to. And most of all, the most important one, we'll be there at your open house to support you the whole way. Like I'll be there Saturday. I think it's 11 to 3 with Joel. So that's just one of the many open houses I've done with you guys. So
Right.
and I look forward to them every time, man. So.
And those financing flyers are great because the potential buyer coming in through the door can see what their monthly payment could look like if they go FHA or FHA 100 versus
Right.
conventional, so on and so forth.
Yep, absolutely, absolutely.
Yeah, and do we see more FHA approved buildings coming up? I know you shared that wonderful list with us
Yeah,
in
the condo
August
for-
of all the condo buildings that are approved for FHA. If someone in the
conventional.
class now for conventional?
Yeah, for convention.
Oh, okay. So if someone doesn't have the list, raise your hand and we'll definitely provide it to you because they keep that list pretty up to date.
Yeah, yeah. So definitely that condo list has been growing steadily month after month because everybody's fixing their budgets. You know, it's gonna be a rule. They have to have everything set in stone because the state of Florida wants, you know, those condos to be
Mhm.
viable, you know, to be able to fund and people right now are stuck in these condos, you know, and they're struggling to get rid of them because of all these issues, you know, like there's one right now I'm dealing with in Jupiter that has like a structural issue and like it's ongoing repairs are like 800,000, like stuff like that is insane, you know?
Yeah.
So over time, yeah, eventually, you know, maybe like in a year's time, maybe hopefully almost all of them, you know, like maybe a couple years, I don't know. But definitely month after month, I've seen more and more so on that list. So and it makes it a lot easier too when you're trying to find a buyer, a condo, because some people actually prefer condos. And you know, you go through the list real quick, you look up the association name, and you could see we have it there. It's either full review or limited review, all the way to the right. Meaning full review, you can do 5% down, and you can make it in there. And then limited review, you have to do 25% down. So.
Okay, and now January 1st, all associations have to have their information readily available. Ray, would you like to chime in on that? Do you know what it's going to entail as far as transparency from the associations?
Well, no, so January 1st of 2025, which is right around the corner, the reserve requirements for all associations, anything higher than 3 floors or more, I believe, will follow basically the same guidelines that FHA and conventional follow. So we shouldn't have a reserve restriction after January 1st. The only restrictions we're pretty much going to have are going to be insurance based for the building itself. Because that's where some buildings are cutting corners and lowering their liability insurances and their dwelling insurances. And then the only other thing is just, you know, any engineering specs or structural stuff if they have it, you know, if they have any deferred maintenance. So which are minimal. I mean, we do see them coming up, but half of the projects that are not approved might actually be approved in 2025.
Good. That's good news for 2025, definitely.
Yep, definitely.
Okay, and last but not least,
Yeah.
do we do a drum roll? I gotta share a screen and then you can give us more insight of opening. Yes. And we are all cordially invited, right, Ray? To your new
Yes.
state-of-the-art office on October 10th. And what
Right.
is the new office grand opening? You're in the same building. What are you doing differently now?
So it's the same building. We purchased a couple of large units upstairs on the top floor, on the 3rd floor, and then both those units lead out to the rooftop terrace where we can host happy hours and realtor get-togethers and stuff like that.
Very nice.
So now, you know, half the unit I think looks like Google, something out of Google, and you know, so our sales floor is all one big open area. It's big and beautiful. I actually sit in there with everybody. We all help each other structure loans and just to help each other succeed. And then the other half is more executive suites and, you know, big conference room for lunch and learns and whatnot. But it's a big, beautiful office. We're in love with it, and we would love to have each and every one of you there on October 10th.
Definitely. Only a few blocks away from here on the Palmetto Frontage Road, Thursday, October 10th from 5 to 8 p.m. And imagine you're going to get to meet the staff, the underwriters of the files, the mortgage loan officers, even though our preferred mortgage loan officer, Austin Palacios, is here always. How many days a week are you coming to the
I
office
do
now?
three times a week.
Yeah, he likes it here a lot. He gets his own private office.
Yeah.
Nobody bothers him. Huge panoramic screen. And that's where all the magic occurs.
Absolutely.
Okay. Well, we're coming upon the hour of this class. I don't know if anybody else has any questions. Joel's been very attentive to today's class. Do you have any comments or a question you'd like to ask before we wrap up? He is muted.
También also in the grand opening, the mayor of Miami Lakes, Manny Sid, will be there along with most, if not all, of the council members of the town of Miami Lakes. So we're also getting a proclamation where I believe October 10th is going to be First Origin Mortgage Lenders Day in Miami Lakes.
Wow.
Since we've been in business over 18 years and mostly in Miami Lakes, so they're giving us a proclamation for First Origin Mortgage Lenders also.
Yeah, and that leads me to the fact that you're very active. You play a very active role with the Miami Lakes Chamber of Commerce. And by the way, Canvas Real Estate Miami Lakes is also a member of the Miami Lakes Chamber of Commerce. It's the one and only Chamber of Commerce in Miami Lakes. We're a tight-knit community and we do support each other. We offer our services and do business right there.
Yeah.
Okay. So they usually hold their monthly luncheons in the middle of the month on a Wednesday. That's why we decided to do Ask Our Lender on Fridays and next, excuse me, on Wednesday, the last Wednesday of every month.
Yeah.
Okay. So Ray, maybe next month we could do the same version in Spanish. Do you think you're up for the Spanish? Ask Our Lender, preguntarle a nuestro prestamista.
Yeah, absolutely. Anytime.
Perfect, perfect, great. Okay, if nobody has any questions, Joel, I hear Joel, I see Joel talking, but maybe he's multitasking. Anyway, okay, so as you know, this class is being recorded. I appreciate everybody that attended. And maybe next month, instead of me asking the questions, you guys ask the questions, okay? Joel, we're not able to help you. I'm not sure why. We're not able to hear you. Let me take the mute off. Okay, not sure. Technical difficulties here as usual with us, but we'll get this right eventually, okay? Well, thank you everybody for chiming in and making this first session of Ask Our Lender at Canvas Miami Lakes a successful one. Much luck to everybody. Hope that storm goes away right away and we could get back to closing deals, right?
Yeah.
Okay, so we'll say a little prayer for that as well.
Amen. Amen.
See you next week. And by the way, it's the end of the third quarter.
Yes.
The end of the third quarter. You know, Joel just lifted his phone, so maybe why don't we just call him and see what he has to say before we disconnect?
Yeah. Unfortunately, I was on a call.
Okay, I knew you were multitasking.
Yeah.
I knew you were multitasking there, but that's usual for us. Okay. Well, thank you again.
But yeah, it's all
Go
good.
ahead, Joel. Go ahead.
Yeah, it's all good. Thank you. Thank you for sharing. Austin is the bomb.
Thank
He's
you. I appreciate you.
he'll always pick up your call. That's what I like about Austin.
Yes, even on vacation, we felt bad
Yeah, he
calling
does.
him, but he was
Yeah, he's
picking up our
committed.
calls, and that's what makes
Yeah.
a difference. Okay.
Yeah, he's committed. He's committed to the process. So I
Great.
appreciate it. Oh, by the way, Austin, we're not gonna do the open house this week. I got the property on the contract.
Ooh, okay.
All right.
That's awesome, bro.
Even though I've sometimes have done an open house, even when on contract, but
I know.
congratulations that you're on contract.
I
Okay.
know. So they're
Great.
doing the inspection today. All right.
Okay,
We'll
so
catch
it's
up,
the
okay?
end of the
care.
quarter. We're gonna announce our top producers next week, and let's give a strong effort to October, November, and December so we can finish the year much more successful.
Indeed.
See everybody
Bye.
next Wednesday.
Good to see you, Aaron.
Nice to see
I'll
you.
reach out to you, man. All right.
Thank
Nice-
you. Bye-bye.